Unser nächster Interviewgast hier am Fonds Professionell Kongress ist Rose Ouahba. Sie ist zusammen mit David Older verantwortliche Fondsmanagerin für den Carmignac Patrimoine. Rose, nice to have you here. Thank you very much for your time. When we want to win back the trust of our customers was a central topic of our last interview we had in autumn 2019, last year. Now, how near are you today to this goal?
I think we have made great progress with David. We can see that from the stabilization of the flows of the portfolio, so we are confident that we are on the right path to do so.
And what did you, or David, what did you change, in fact, in the portfolio?
So we changed actually a lot of things. The way we approach risk is a bit different than what we used to do. It is not exclusively managing the risk by managing the exposure of the fund, but much more work is done toward the balancing of the risk within the portfolio. So in other words, to have less timing risk in the market, like trying to say when should I sell, when should I buy, which is a bit complicated. We try to refocus and reshuffle the portfolio to be less sensitive to cyclicality, because we do think that there is not a lot to say about the way the economy is going to go going further. It's a slow motion recovery, and therefore we have refocused the bulk of our portfolio into stocks with high visibility, which, as you know, is the strength of David, so meaning a large proportion of tech sector, but also healthcare in the US. And this is also enabling us to be not so sensitive to, the market wanting cyclical, and then 3 months later hating cyclicals, and then wanting value, and then 3 months later not wanting value anymore. So we stick to our conviction of this core portfolio. Whether on the fixed income, we have done a great work into going into valuation, so valuation metrics in order to be flexible about what we don't like, shorting some markets and being long others at the same time if we think that there is still value.
It's just about 1 year ago that Morningstar downgraded the fund in its rating from bronze to neutral. I think in April of this year there will be a review of this rating. What do you expect for your fund, for the Carmignac Patrimoine?
So we have tried to tick the box. They were asking for more stability on the equity side, and that's what we have achieved. They were also asking for more alpha generation, and we have ticked the box here. We are generating alpha on the equity side. And they were also asking for one third thing, which we could not provide at that time, which was to see how David and I will tackle this mandate. And we could not do it because we were just starting. So now we hope that this year we will be able to demonstrate that we have been working together in good intelligence with very well knowledge of each other's risk, and very well knowledge of how we can achieve this dual mandate, which is the one of patrimoine.
You mentioned it, responsible for the bond portfolio in the fund. What makes, on the one hand, especially your job, difficult at the moment, and where, on the other hand, do you find interesting investments at all?
So what is difficult at the moment is that it's quite unclear for me whether I should use bond to be a risk mitigator or whether it's a risk factor. And it could be both, honestly, because when you take the view of the large decrease in risk premium and also in rates, obviously, you have now the risk of the opposite, like people saying, oh, maybe things are not that bad, and therefore we should start to short bond. And we are just in the between of two worlds, where we could also argue that maybe the recovery will not be that strong, and therefore you need to use bond as a risk mitigator. So what we have done to go around that is we have tried to balance the portfolio again. So having long credit exposure where we do think that they are cheap, and having as well some long exposure to bond where there is an asymmetry. That is to say, where central banks can continue to cut rates if we were to see a slowdown. So that's US and Australia, mainly.
Perhaps my last question, what are the biggest risks that investors are facing in those times that we are experiencing, in your view?
I think the biggest risk is still the fact that we are all sensitive to any change in the approach of the central banks. So that is key, because it is true that when you look at the macro, it is not the macro that have made the stock market goes to the highest level ever last year, because we were to the contrary in deterioration mode in terms of macroeconomic outlook. So it is really the central banks that have all the power to drive asset valuation and to drive asset inflation. So if we were to see another mistake, such as the one we have seen from the Fed, which has clearly over-tightened in 2018, then there is a sort of dominoes effect throughout all the asset classes, and it will be complicated to find some shelter.
Thank you very much for being with us, Rose.
You're welcome.
Thanks.